Hello, everyone. I'm so excited to be here with you and so grateful for the opportunity to connect with each one of you and for this platform that give us opportunities for connection and collaboration. My name is Jana Masik. I'm the host of LinkedIn Live broadcast Powering Unique You. And I'm very excited to be here with my friend Kruti Krishnan, who has many years of experience in global mobility, and she's going to talk about strategies of tax in global mobility today. Hello, Kruti.
Hello, Jana. Thanks for having me here.
Yes, yeah, so excited to be here with you. And before we jump into the topic, and I know you're going to share a lot of golden nuggets and a lot of things that we can learn with us, please share your professional journey and some highlights and what you're doing right now.
Absolutely. So my professional journey started about 12 years ago. I started off as a tax analyst at Ernst & Young. And back then when I joined Ernst & Young as a tax analyst, I had no clue what I was applying for, what the job role meant. Even I just applied with just one intention of doing a good job at whatever it is I take up, and carried on with that intention for the first few years. And after a point of time, I realized that, you know, the decision I made on joining mobility industry was a good one. And I realized this is where I see myself in the foreseeable future. And so while I was in Ernst & Young, I had the opportunity to take on an international assignment to New York. And it is around this time that I made a decision myself to move to North America at some point in the future. And so a few years down the line, I made a move to Canada with my husband. I've been here for the past close to 6 years now. And while I was in India, I mostly had experience with US tax, but ever since I've moved to Canada, I've had experience with both US and Canadian tax. While I was working in PwC in Canada, I came across the opportunity for an in-house mobility tax specialist role, and I jumped at the opportunity because I felt like, you know, being an in-house tax specialist, aligns with my skill sets or my areas of strength. When you're in the tax service industry, you can only help your clients to the extent of, the problems they make you aware of, whereas being an in-house tax specialist gives you an opportunity to identify what the problems are and even solve for it proactively, as well as create policies and procedures for the future. So that's what got me excited about this role, and have never had a dull day since then, so enjoying my role as an in-house mobility tax specialist.
Yes, this is a wonderful journey. And I love how when we connected together, I felt that we have so many similarities in a way, right? We both came from different countries. We migrated in the country where we are right now. We were on a service provider, and now we are on the corporate side. And I can hear that you've learned a lot when you were with those large tax organizations, and now you can bring that value and provide the resources to the corporation that you're supporting. So that is wonderful. And I know today you've prepared some of the lessons that you've learned and some of the strategies that you believe are important for companies. I feel maybe smaller companies, because larger companies, they do have a lot of resources, whether it's outsourced or maybe inside the house. But the smaller companies, sometimes they're limited on even their knowledge base, within the company, of what is a great strategy to approach the mobility from the tax perspective. So please share the first strategy that you have for us, Kruti.
Absolutely. And I think before I even start sharing about strategies, Jana, what I do want to share is that, a lot of mobility teams, a lot of companies when they think of compliance with respect to mobility, they think of immigration and tax. Mm-hmm. Immigration, a lot of teams are thinking of it upfront. They're planning for it, because obviously without thinking about immigration, you can't have the employee embark on a journey. Tax is usually, a lot of teams just look at it as an after, a reactionary aspect of compliance, and they always deal with it after the fact. But planning for taxes really takes you a long way in terms of having a very efficient mobility program, as well as looking at mobility not just as a cost center, but also as a way you can plan, efficiently move your people around to where you need them at the right time in a cost-effective way. So I think planning for tax aspects of mobility is crucial, and something that most mobility programs fail to see or plan for, and they just react to it. And I think looking at tax as a planning aspect, as a strategy aspect, is the message I want to probably focus on through this discussion today.
Yes, this is wonderful. This is wonderful opening that you've brought into conversation, because behind the conversation and the strategies, there are reasons, why many companies may be in a reactive mode, and it doesn't serve the corporations, and it doesn't serve their employees in the best way. Because whenever you react to the situation and you're not prepared, you may not have all the resources available for you to analyze and prevent certain things that could be prevented earlier on.
Absolutely.
Yeah. So I can't wait to hear for you to share your lessons and some knowledge with us.
Yeah. So I'll go with my first tip. My first tip about planning for country combinations.
Yes.
And this is with respect to, when, of course, a lot of larger organizations have a good idea of where their employees are, what kind of profiles they have of employees around the globe, etc. When you have that understanding, and let's say, for instance, you have a project in Australia where you have to send about 5 structural engineers to go and work on that project. And when you have knowledge of where all of your structural engineers are across the globe, you can plan very much around, how you can save on tax costs while still making sure that your employees are able to go to Australia and work there. So for instance, if let's say you need some employees in Australia for 4 to 5 months, the structural engineers, like I said, I would first look at New Zealand maybe.
Mm-hmm.
New Zealand, Australia has a tax treaty that basically says if you send anyone to Australia for up to 90 days, you send them on a secondment, you don't have any sort of tax obligation to, you don't incur a tax obligation at all, because the treaty allows for it for up to 90 days.
Yes.
So I would first look at our resources in New Zealand before I look at any other country. And when I'm looking at any other country, I would try and do some sort of tax cost estimates to figure out what would make the most sense from a tax cost perspective. Would I send someone from Canada? Would I send someone from the US, etc.? Probably the likelihood, if you're sending someone from a high tax cost country to Australia, which is also a high tax country, would make sense, because you will be able to offset a lot of the taxes on salary through foreign tax credits.
Mm-hmm.
There's a lot of planning you can do to where you send your employees from if you need an employee, let's say in Australia or any other country. So when you are able to do that planning up front, you can work on country combinations. You can create certain friendly country combinations and certain unfriendly country combinations. You can readily have as in your strategy or mobility strategy. So working on country combinations when you're looking at mobility is important, and you look at not just treaty, but also domestic regulations as well when you look at country combinations. The second tip I would give is also with respect to, accounting policies.
Yes.
It makes sense, for all mobility programs to sit down with your global accounting teams and creating a formal policy or structure in terms of how you will account for mobility expenses or salary costs when employees are traveling on short-term assignments or long-term assignments. So for instance, in my current company, we currently have a formal accounting policy where we say if someone is a support function, they're not working on billable projects or chargeable projects.
Yes.
If they work in any other country for less than 6 months, we can their costs in the home country. So this gives us an opportunity to be able to claim treaty benefits for these employees in the host country. You have that formal discussion with your accounting team and everyone's on board with how they need to recharge costs or keep costs between entities. It keeps things simple, and you don't lose opportunities to be able to take treaty benefits, etc. at a later point of time, because a lot of times for business travelers, you only get to know about their travel after the fact. And so if you have your accounting policies accurate, then you can even deal with business travelers, treaty exemptions, etc. after the fact. So that would be my second.
And I would say, yeah, I would love to expand a little bit on that. So the first one was really good is country combinations. And there are certain countries that do have, you know, tax breaks and some agreements and then the leeways where you're coming from another country and for a period of time. And then you look at the integration within the company with the accounting team in how the resources and how the cost of the labor that are allocated to the particular employee are being budgeted or being distributed within the company on which entity does the cost goes, and that would affect the final calculation. And that most of the effect is for the company though, right? Or
Absolutely.
share maybe a little bit on, you know, the effect for the company and the effect for the employee potentially.
Yeah, so this accounting policy framework that I spoke about is, of course, for the company. When the employee is treaty exempted in the host country, it saves tax costs for the company, as well as for the employee to not have to deal with, maybe having to file a tax return or incurring a tax obligation in the host country as well. So it works both for the employee as well as for the company. The country combinations also serves the same purpose, right? Like if you are able to use the treaty benefits, it is less administratively burdensome for the employee when they take on these assignments. But of course, when you're not able to use treaty benefits or you're not able to take benefit of certain local domestic regulations of taxes, you absolutely should provide support to the employee in the form of tax equalization. And that's at all. When you're sending someone to work for you, tax equalization should absolutely be offered to employees that are working for you in a different country.
And just maybe for some of the listeners that may not be as familiar with it, just give a little bit of a highlight on what the tax equalization is.
Sure. So generally when companies send their employees abroad to work in any other country, the employee is likely to trigger a tax obligation in that other country. Now, when you look at it for yourself as an individual going and working for your company in another country, you don't want to have to deal with taxes in both countries, in both home country as well as the host country. So what a lot of companies do is that they offer tax equalization support to these employees. And what this achieves is essentially it makes sure that the employee only pays as much tax as they would have had they remained in the home country. Any incremental liability that they will likely incur either in the host country or in the home country will be funded by the company. So the employee just continues to receive the same amount of net income that they would have, had they not taken up the assignment abroad at all. So that's what the tax equalization is.
Yeah, this is really good explanation. It's simple. And sometimes when you talk about the terms, it's good to put the, what the meaning of it. And that way, listeners can get a little bit more broader perspective. So yes, very good information, Kruti. Please tell us about your third strategy.
So my third strategy is around planning around assignment durations. So we spoke about treaties. A lot of the treaties have, the dependent personal services clause or the dependent personal service article, which basically allows you to exempt income from being taxable in the host country, provided certain conditions are met. And most treaties have wording around 183 days, which is essentially 183 days either in a month period or in a given tax year. So, and some other conditions that need to be met for it is, that the costs typically need to remain in the home country. You do not recharge the employees or the employment costs for the employee to the host country. The home country entity does not have a permanent establishment in the host country. When all of those conditions are met, you can claim a treaty exemption. So careful planning around, limiting an employee's time in the host country to make sure that you are eligible to claim the treaty benefits is important. And you can only do that when you know a lot about the project, how long the project needs employees, and whether or not you can rotate employees in and out of the country. Instead of sending one employee there to work for two countries, you can probably try and see if you can send 4 employees over the span of 4 or 5 months each, rotate them in and out. That's one tip. And there's also some planning you could do around duration of assignment. Let's say you forget the treaty, but you have a long-term assignment, but you're sending, let's say, someone from US to Australia, maybe. You want to consider rules around temporary away from home rules, which allows you to exclude certain mobility benefits from being considered taxable. So in order to be able to do that, the assignment should be no longer than 12 months. So you can planning around duration for of the assignment there, depending on what country they're going from and to. Like US has the temporary away from home rules, Canada has the special worksite exemption, which allows you to exclude board and lodging expenses for up to 2 years. UK has the detached duty relief. And so a lot of countries have similar regulations. So understanding what all of those regulations are and how to take benefit of those regulations is going to be useful in planning the assignment duration for employees.
Yes, this is really good information, and especially I believe for companies that sometimes have a lot of business travelers. Maybe they do not have a longer term assignments, or there are companies that may have like a rotational schedule. All of those considerations need to be taken in place ahead of time, so then the companies are prepared. So this is really good information, Kruti, and I can't wait to hear the next one from you.
Yeah, a little continuation to the assignment duration planning is
Yes.
to do with planning around potential PE risks. Instead of having multiple trips, if let's say you need 4 or 5 different employees to go and work on a project in a particular country, consolidating all of their trips around the same time frame can sometimes help mitigate a PE risk. If all of them travel at the same time and you limit their travel to a certain number of days based on what the treaty speaks about for PE risk, you could limit your exposure, PE exposure in the host country. So PE is permanent establishment risk, which your employees going abroad can potentially create a corporate tax presence for your company in the country that these employees are traveling to and working in. So that is what is PE exposure, and you could limit your PE exposure if you consolidate multiple trips of multiple employees and limit the time to a certain number of times. So you could do some planning of assignment duration as well around.
That makes perfect sense. And so the PE exposure is also is when the company has some maybe short-term project without establishing an entity in the country, without having permanent establishment, banking, and et cetera, et cetera. But if you send a lot of people into that country and they stay there for a longer period of time, then at some point there is that risk where it is considered, although you are not officially established in country, you may be responsible to carry on for taxes at the very least, right?
Absolutely. And everything I'm saying should be reviewed with a tax service provider or your tax advisor.
Yes, no, absolutely. I feel that even having this conversation, and the reason why I was so excited to connect with you, because you have this unique experience of working in the service provider and doing the assessments for many corporations, considering the different scenarios for many corporations. And then coming to the corporate side, you can see the unique challenges within the corporation where maybe that particular matter in global mobility may not be considered as the most important at some time, right? Or may not be looked at ahead of time, just like you mentioned in the beginning. Maybe it's more after the fact, more reactive approach. So having this awareness and consideration and discussion is good for those people that maybe run, HR, entire team and global mobility and relocation and everything by one person. There's a lot of smaller companies, and that one person may not, maybe have some understanding, but may not be able to be aware of certain things that we're talking about that will definitely benefit, at least having a knowledge and at least knowing that this is something you may have to, discuss and look at and reach out to find a provider who can give you more solid advice to your particular case.
Absolutely. That totally makes sense.
Yes. Yeah, so this is really, really good, really educational because, and also, as you know, in global mobility, although we move people as a companies, companies are responsible for the employees moving on assignments. Some of the business travel fall into that category. But there's also different segues into this. There's a relocation segue, there's an immigration segue, and some of the in-house specialists who are working on mobility may not be as familiar with the taxation matter of it. So I feel it's really education opportunity for all of us. My tax is not my strongest either, so even I'm learning something from you. So I'm really grateful for you to come and share your wisdom with us today.
I'm excited as well. I'm thrilled.
All right, and I think you have another one more.
Yeah. So
a
few more, but I'll touch on all of these other tips. One area a lot of mobility teams these days are doing very well in is in how they deliver some of the mobility benefits. So a lot of relocation service providers these days are, offering great advice in this aspect. They are able to help mobility teams plan for how they deliver mobility benefits to make sure we get the tax benefit that we possibly can in each country. So sometimes housing allowances, when you pay it as a cash allowance, it is considered taxable, whereas if you pay directly to a third party, it may not be considered taxable. So likewise, there's a lot of mobility benefits planning and how you could do in terms of how you deliver the benefits. It differs from country to country, so some planning there is always going to be helpful, and relocation service providers these days are doing a great job at it. The other tip I would speak about is consider whether you can have a process or policy in place where you can have employees fund their own host country tax obligations. This may be something you can at least use for your commuter population, if not for, let's say, all of your business travelers or all of your international assignee population. At least it is something that you might want to consider for your commuter population, where you can have employees, just regular, whatever tax withholdings you collect from them in the home country, you can use that to reallocate it against host country tax withholding. A lot of countries have provision for you to reduce your home country tax withholding to the extent of foreign tax credit that you expect to claim eventually for whatever taxes you pay in the host country. So you could take off some part of the home country withholding and allocate that against the host country. And it's not the same as hypothetical withholding. What I'm talking about is actual tax withholding taken off. Use that to have the employee fund their own host country tax withholding. What this does for the company is that it reduces a lot of the cash outlay in terms of funding the host country liability on behalf of the employee. It also, reduces the need for gross ups and all of that extra work and extra cost that adds up when you look at, the tax cost of a mobility program. This, of course, requires a lot of planning, a lot of discussions with your payroll teams to see if they can, have a mechanism or a process in place to allow you to be able to do that. And it also requires a lot of approval needed from the employees to agree on reallocating taxes, etc. It may be a lot of administrative work initially when you roll out that program, but once you have it on, I think it does save a lot of tax costs for the company if you're able to make this work. So that would be another tip. But that apart, I think all mobility programs should focus on educating their global payroll teams. And no mobility program is successful without, a robust, knowledgeable payroll team. And so investing that time with the payroll team is important, making sure that they're getting the education they need, either from tax service providers or you yourself doing some sort of coaching sessions with them, so that they understand what they need to do for business travel, so what they need to do for reporting mobility benefits, etc. Is an investment that will take you a long way. If you have a strong payroll team, you have a strong mobility framework as well. And then the last, not the least, tip is look ahead, foresee, and plan. And what I mean by that is don't just look at what you have to deal with on your plate today, but look foresee and see what to expect in the near future and plan for it. Like, for instance, COVID, no one saw it coming, right?
Yes.
Had ever planned for it.
Yes.
Right now, of course, we're all scrambling to deal with it. We are trying to get our employees back to home countries. Some of them extending their assignments in host countries. Some of them are stuck in various other countries. We have a lot of remote worker populations with a lot of, managing our mobile population at this point with COVID. But take a step back, maybe look at how things are going to change in the future. And what I envision would be a possibility for us in the future is that we might continue, we might see an increase in the international remote worker population.
Yes.
You might want to step back and see, do you have to plan to have like a remote worker policy maybe in place?
Yes.
Like it look like from a tax support perspective, how it an immigration perspective. So just, of course, we're all busy at this point. We have a lot to deal with, but also just taking a step back, seeing what it's going to look like in the future and planning for it will take us a long way as well.
Yes, this is really good. Way of putting it together, Kruti. I really like how you've given us so much valuable tips, so many of valuable action steps that mobility professionals can take in their responsibilities in their roles, and overall with the pandemic, with the crisis that we are in right now, to be able to still look ahead, still think about that things may be able to shift and be flexible to adapt to some of the things that we may not be able to control, but still be able to prepare for those to the best of our ability.
Absolutely.
Yes, this is wonderful. And I would love for you to close this amazing conversation with some of your experience through this unstable time, so to speak, and some of your actions maybe as that you're doing with your team to prepare for what's next.
Well, right now, I think my whole team is very busy dealing with the COVID situation. We've had a lot of new situations to deal with. We've had people going to countries that is neither their home country or host country, just stuck in a third country altogether. We've had very new challenges that we've had to solve for, and it's been interesting. A learning experience as well, just dealing with these situations we've never seen before, but at the same time it's difficult for the employees, for our employees that are in various locations for work reasons or sometimes even for personal reasons, and just being there for them, understanding what their situation is like and making sure that they get the kind of emotional support at the same time as providing them the resources they need to just sail through the situation is important at this point. And I think that's what most of us on our team are focusing on.
Yes, this is good. It's emotional support and being present, convey the calmness, convey that, those employees that are scattered all over the world. And sometimes, like in some situations, they still have to figure out a way to travel. And try to manage that. Arrangements are really, really important. I feel that we're all in this together, and all of the mobility teams within the companies, they're trying to support their employees, are working really hard to overcome some of the completely unforeseen obstacles that came on our way, and still navigate the business objectives, still do our best to meet the business expectations. So it's definitely is a time where we can tap into supporting each other as well, and sharing some of our knowledge, some of our wisdom, and some of our experiences that will hopefully benefit those of our peers that are in the same situation right now.
Absolutely. And also, I mean, if I have to look at it from a tax perspective, what would be the some of the things that I would think mobility teams should be thinking about in the current situation is, we have this economic stimulus package in the US. It's possible that a lot of the employees that were on some kind of mobility program in 2018 or 2019 may not qualify for the stimulus package, simply because of them having all these taxable mobility benefits included in their W-2, and therefore there was an increased AGI, and so the income thresholds may not have qualified them for the stimulus package. So review populations to see if someone has been at a disadvantage because of it, and seeing if you should probably reimburse them for any differences difference in the stimulus package that they would have received but haven't received just because of the mobility package. Reviewing that, making sure you give them the support that they need for it is going to be crucial at this point. The other aspect I think mobility teams should be looking at is, as you scramble through and probably move people around through this COVID situation, some of the payments that you likely make to your employees may qualify as a qualified disaster payment. But again, this is something you should review with your tax service provider. And you could do some planning with your tax service provider there and see if some of these payments can be considered non-taxable to your employee. And that apart, a lot of countries are coming up with similar economic stimulus packages. They're either giving tax credits or some sort of creating a policy around whether you will consider it hypothetical or non-hypothetical for tax equalization purposes is also something you would need to think about for COVID, I think, at this point. Yeah, that just, remembered some of those points. When you asked me about COVID, I probably didn't have the answer, but just some of them, and I told you now. But anyway, there's so much going on and so much that I can share, but of course, I'm going to stop myself.
Yes, well, I truly appreciate you coming in, getting connected with you. It's been a pleasure getting to know you a little bit more. I'm really thrilled to continue staying in touch with you. And thank you so much for coming in today, sharing your knowledge, sharing your tips and strategies, and also your advice. It's definitely is valuable, and I hope it is valuable to our listeners. And I'm looking forward to speaking with you again soon. And maybe you could say a couple more words before we close.
Thank you so much, Anna. It's always been, I follow your videos. I follow all of your shares as well. It's always been a new learning for me every time I'm on one of your sessions like these. So I just hope, I just hope everyone stays safe and stays home. And I hope we get through this COVID without having to deal with so many deaths as we're currently seeing today. I just hope someday there's a medical and none of this, is the way it is one day when we wake up, but it's probably going to take us some time before we get there.
Yes, I believe right now during this time, something that I've listened to yesterday was really interesting, and I share before we close, that sometimes financially we may not be where we want to be, and we focus a lot of things in the finances, our circumstances, our financial situation that may be shaken and stable for some of us, especially those that have been affected, maybe have lost their jobs. However, what is important is to really upskill your intellectual capacity, to really, instead of worrying and wasting your time, to focus on sharpening your skills, learning something new, and elevating yourself mentally, prepare yourself for something bigger, for something brighter once we are over this dark curve. And then the second part of it is relational collateral. I would say there's a relational abundance that you can create. And relational abundance is the circle of people that you know, the circle of people that know you, and how you can bring value to others, how others can bring value to you. So when you take your mental, your intelligence, your capacity in learning and skills, and multiply it by your people relational, collateral, then you actually bring in the financial stability to yourself, because nobody can take your skills, nobody can take your knowledge, nobody can take what you know. Even if something happens, you will still have the experiences and the knowledge that you've gained within you. So I felt it was very helpful to me to say, this is a time that I cannot waste. This is a time where I need to focus on upskilling myself, learning new things, learning new skills. This is a time where I need to reach out to people, connecting with people like you. It's been a pleasure to connect with you and get to know you a little bit more. And do your best to be financially responsible, and hopefully we will get out of all of this together stronger, brighter, and more united as ever before.
Absolutely. And I agree with you word to word on it.
Yeah, it's wonderful. Well, thank you so much again, Kruti, and I see you next time.
All right. Thank you so much, Anna.